Hello everyone, welcome back to the channel. Are you looking to make the most of your money while also keeping it simple? Imagine a platform that combines high-yield savings, effortless investing, and tools designed to help your money grow, but all in one place. Well, Wealthfront might just be your ultimate financial co-pilot. And today, I'm going to share with you why Wealthfront is my banking platform of choice, and why it might be the banking and investment platform that you've been waiting for. I am so happy to have you here with me today. Let's get started. Let's start by looking at traditional banking. Banks have been around for centuries, and they offer services like checking accounts, savings accounts, and loans, amongst other things. And while they're an essential part of our financial system, they do have their limitations. Now, traditional banks provide the security of physical branches and human interaction for those who prefer face-to-face service. And they also offer government-backed FDIC insurance up to $250,000 per depositor. And this helps to ensure that your money is protected up to that dollar amount. And additionally, these institutions provide easy and immediate access to your funds through branch locations and a network of ATMs. Now, unfortunately, traditional banks often come with high fees and extremely low interest rates on savings accounts, partly in due to the overhead that's associated with marketing and the expenses of having brick and mortar locations. For example, the national average interest rate for savings accounts is just 0.01%, practically nothing. And this is true of your banking institutions like Chase, Bank of America, and Wells Fargo. They all offer that pretty abysmal 0.01% interest rate. And while ease of access is a pro, it can also be a con for those who struggle with impulse spending. Having funds immediately accessible can lead to less thoughtful financial decisions. And lastly, traditional banks often struggle with innovation, offering outdated tools and little integration between saving and investing options. And this can make managing your finances feel clunky and time consuming. Over the last 2 decades, fintech or financial technology companies have transformed the way that we think about banking. These companies focus on creating efficient, tech-driven financial solutions that compete directly with traditional banks. You may be familiar with names like Chime, Ally, SoFi, and Wealthfront, which we're going to be talking about today, because these have become household names and they offer services ranging from high yield savings to investing and financial planning tools, but all through these sleek and very user friendly platforms. And fintech companies, they excel where traditional banks struggle, interest rates being one of the prime examples. So, fintech platforms often offer savings account rates that are 100 times or more higher than traditional banks. And take Wealthfront as an example, their high yield cash account currently offers over 4% at the time of this recording. There's also integrated tools. Fintech platforms seamlessly combine saving, investing, and financial tracking. For example, Wealthfront will let you manage everything in one app, unlike traditional banks that often require separate accounts and apps for each service. Now, a little more on Wealthfront. Wealthfront was founded in 2008 by Andy Ratcliffe, a venture capitalist, and Dan Carroll, a financial advisor. And their mission was simple. They wanted to democratize investing and financial planning by making them accessible to everyone, not just the wealthy. And Wealthfront started as one of the first robo-advisors, a service that uses advanced algorithms to create and manage investment portfolios. But unlike traditional advisors, robo-advisors eliminate human error and bias, offering a more efficient and cost-effective way to invest. You can think of it as a personal financial planner powered by cutting-edge technology. Now, Wealthfront primarily targets individuals who value simplicity, automation, and low cost. And whether you're a young professional just starting your financial journey or someone who prefers a hands-off investing approach, Wealthfront's tools are designed to help you save, invest, and plan all in one place. And unlike competitors that focus on one specific area, maybe like high yield savings or investing, Wealthfront offers a comprehensive solution. It combines saving, investing, and financial planning all into one intuitive platform. It can get a true all in one tool for managing your wealth. So, what does Wealthfront offer? Wealthfront offers a high yield cash account with an interest rate exceeding 4%. It's actually 4.25% at the time of this recording. So compare this to the 0.01% rate that you'll find in most big banks, as we discussed previously. And the difference is pretty staggering. To put this into perspective, if you save $10,000 in a Wealthfront account, you'd earn about $400 in interest over the course of a year. And compare that to just $1, one single dollar that you'd get in interest at a traditional bank. Another benefit is FDIC insurance. So Wealthfront offers an account that gives you coverage of up to $5 million, dollars, and that's 20 times the standard coverage in most banks. Now, this means that Wealthfront is not only more lucrative for your savings, but also safer for larger deposits as well. The investing platform of Wealthfront is a standout. Wealthfront's robo-advisor creates a personalized portfolio based on your financial goals and your specific risk tolerance. It's fully automated and includes features like automatic rebalancing and tax loss harvesting. Now, automatic rebalancing is something that helps to ensure your portfolio stays aligned with your goals by periodically buying or selling investments to maintain your target allocation. This is the allocation that will be determined by your specific risk tolerance. For example, if stocks outperform bonds, the system will automatically shift your portfolio back to its original balance. And this is all done with no action required on your part. There's also tax loss harvesting, and this may be a term that you're not familiar with, but this is a strategy that minimizes your taxes by selling investments at a loss to offset gains elsewhere in your portfolio. So it's like taking a bad investment and turning it into a tax advantage, which can save you thousands over time. There's also the low predictable fees of Wealthfront, which is also a great advantage. So Wealthfront charges a flat 0.25% annual advisory fee, and this is regardless of your balance. So unlike some platforms or traditional advisors, the fee doesn't increase with your account size, and this gives you predictable and cost-effective ways to invest. Now think about this impact over time. So with Wealthfront's 0.25% annual fee versus a traditional advisor's 1% fee, let's assume that you have $100,000 as an initial investment and you are expecting an average annual return of 7%. And that's going to be over 20 years. Now, with Wealthfront, you'd pay about $17,300 in fees, and your portfolio would grow to approximately $349,000. In contrast, with the 1% fee, you'd pay around $65,000 in fees, and this will leave you with just $293,000 at the end of 20 years. Now, that's a difference of about $56,000 in portfolio value just because of the fees. And this example highlights why Wealthfront's low and steady fee structure is a game changer for long-term investors. Wealthfront also has a really awesome wealth management platform, and it can serve as your financial dashboard. It helps you set and achieve your financial goals, and all from a single app. Another great benefit, I would say, is the accessibility of Wealthfront. Now, while Wealthfront isn't as immediately accessible as a big bank, it's far from inaccessible. Wealthfront offers tools that you would expect, like a debit card to access your funds and get money from ATMs and things of that nature. And it also offers same day transfers to many banking institutions. But I would say this limited friction that you might experience with Wealthfront is actually a good thing. It may encourage you to be more thoughtful about your decisions around spending and make it easier to keep your savings intact. Now, as I mentioned previously, I choose to use Wealthfront as my banking platform of choice. And one of the main reasons is ease of use. Everything is intuitive and accessible and all through a single app. So whether I'm checking my savings or reviewing investments or tracking progress toward financial goals, it's all in one place. And this provides great simplicity. Wealthfront eliminates the need for multiple accounts and apps, and it helps me to streamline my finances more so than any other platform that I've used in the past. You have the benefit of set it and forget it banking. And with automation features like rebalancing and tax loss harvesting, I don't have to actively manage my investments because I know that Wealthfront is going to be able to take care of the heavy lifting. But if I ever do decide to get a little bit more hands on, there is the possibility of directed investing. And while Wealthfront is great for fully automated investing, it does give you the option to dig in a little bit more. For instance, you can choose to invest in specific categories like crypto trust, or socially responsible ETFs, or technology-focused funds, just to name a few. And this gives you more minute control over where your money goes. We've already discussed the advisory cost savings, and compared to traditional advisors, I've saved already hundreds in fees with Wealthfront. And the difference in fees alone has a massive impact on long-term growth, as we discussed previously. And Wealthfront also has the benefit of providing special offers. Wealthfront offers perks like a 0.5% interest rate boost and advisory fee waivers for referrals. And these incentives make the platform that much more attractive. Now, with all of that said, as much as I do love Wealthfront, there is still a place for big banks. And while Wealthfront covers many financial needs, it's worth noting that traditional banks offer things that Wealthfront does not. For example, you might maintain an account with a big bank for services not supported by Wealthfront, mortgages being an example of that, or to have a small reserve of cash for emergencies or transfers. It's the best of both worlds. And that's going to do it for today's video. Wealthfront combines the best of high-yield banking and automated investing, offering a modern alternative to traditional banking. And whether you're looking to grow your money, to simplify your finances, or reach your financial goals faster, Wealthfront has tools to make it happen. Now, if a Wealthfront account is of interest to you, then feel free to use the link in the description of this video, which will give you a 0.5% boost on the interest rate for your cash account. Also, don't forget to like, subscribe, and hit that notification bell so you never miss a future video. Thank you so much for watching, and remember to dream big, live well, and do great things. I look forward to seeing you again next time.